Welcome to Shark Cap Table Fast, the 1-minute deal maker for sellers and buyers of equity that helps you keep your arms and legs. Now, this evening we're actually going to switch hats, and we're going to come up here to the red and place buy shares, and we're going to have hide all help. And what's going to happen here is we're really going to pretend that we're getting a phone call from somebody that wants our money. So I'm going to come down here to this section right here. You've been offered shares in Whizbang Corporation, a privately owned company seeking expansion capital. Now, this little section here says, good, Shark Cap Table Fast is correctly set up to do a buy share analysis. You should obtain a copy of the selling brochure and dig into it. Most of the deals are terrible, but once in a while you might find one worth your while. Now, I've taken the liberty to enter some typical deal data. So here we have 50 units, offering price $10,000 a unit. The unit shares have 10,000 shares per unit, which translates to $1 a share. There will be 5,000 attached warrants per unit, exercisable at $2 and let's do $1.50. There we go. And now we got to dig in and we find out that the Whizbang shares the company has actually invested about $25,000, and we think they have maybe $750,000 of additional value. We're going to use the very similar analysis that we use to sell. We're going to use the same analysis to buy. So coming back down again, we find out by digging that the Whizbang shares outstanding are 1 million. This may be a little harder to get, the existing options, warrants, and convertibles, but you have to do it because it could be a large amount of dilution. Whizbang says, oh yeah, we're going to sell in 2 years and we're going to get $10 million for the exit value. So ultimately, they've raised $500,000 and the cost to exercise the warrants is $375,000, and that's to the entire deal. Now, you can come down here and you can see the offering summary. I'm not going to bother to read that because it's really a rehash. Let's go back up and see what we've actually done. Now, because we've clicked on the buy shares, we're going to see some automatic data matriculate up. So here's the cash investment. Remember the 750. Whizbang valuation is 775. Whizbang shares outstanding. Now here's something we actually have to do. They said that there was going to be, and by the way, I'm going to move this a little over here so we don't keep looking at it. And we've got to add ourselves the 500,000, so we're going to come here and spin in the 500,000 options and warrants. There we go. Now, right here, we've remembered that 500,000 is what they wanted to raise in total, so we have to spin in that number. And here's this great big $10 million sale price, so we'll spin that in. Doesn't take long. And we read these red lines here, and it says that it's a year 2, remember, so let's crank in year 2. And the last thing we have to do is make the pre-money value unit offering price per share the same as that you see up here, which is $1. So we just crank in here and look down there until we see $1. And we're there. Now notice that normally when we're doing deals, the investors are going to give us less than our total valuation, our founder valuation, and here it's double. I wonder what could be wrong. Could it be that they're overpricing it? Well, let's take a look and see. Ultimately, the Whizbang options are 22%, the Whiz founders have 44%, and the unit holders as a whole get 33 1/3%. Based upon a year 2 sale for $10 million, the Whiz founders come out like gangbusters. The unit holders only get 3.8. Again, the internal rate of return is outstanding, and the units get a pretty good internal rate of return. And the Whiz founders own 66, and the unit holders own 33 1/3. However, how many times have you ever seen a deal actually close in 2 years? And the answer is you never do. So I want to show you just how sensitive this is. Watch this number up here and watch what happens. That's 121. When we go to 4 years, it halves. Gee whiz, not so good. Now, that time value doesn't affect the investment multiple. Now watch what happens if we get less than what we think we're going to get, like about $6 million worth. Well, now we're only getting 2.3 and a 22% internal rate of return. You know, that just isn't good enough. And the main reason is that they've overpriced it by virtue of cranking in this number. Now watch what would happen if we priced it according to what we think it was worth. So we'll spin this down, it'll be a little bit lower. That's generally what happens. Now it looks pretty good, 3 1/3 times, but then now you got a 41% internal rate of return. And even if they get less for this, let's say they get down to 5, you're still going to come out okay. Even if they get 4, you're still going to come out okay. Let's see what the break-even point is. Well, if they got $3 million, you're right about there. So the bottom line to these telephone deals is, by virtue of the fact that they've cranked this up to be too much, right in there to be 1 or 2 or 3, I've seen as high as 5 times what the valuation really is, they have squeezed out every bit of profit that will ever come, and there's only downside. Rarely will you see these $10 million deals get lucky and sell for 15. And it won't happen that they get sold in a year. It's always longer and less. Remember, longer and less, and you get less. So folks, let's go down here and just take a little look at this. Are you really going to see the exit value? And what about the risks ahead? Haven't the founders and the option holders sucked too much out of the deal for hardly any cash? Isn't the pre-money value that drives share pricing way out of line with the founder's valuation? You betcha. And aren't you paying too much for too little? Is there any juice left in the deal for you? And the answer is, So you can read this telemarketing disclaimer. Basically, we get a lot of deals and we look at them just to see how bad they are. We suggest you swim away and save your arms and legs by virtue of using Shark Cap Table. Remember, this is a great tool for buying or selling. We just did the buy side. Generally, you're going to be using it for the sell side, but don't be afraid to analyze a deal using the Shark Cap Table. Now, one more thing, you can come back over here and you can actually see the capitalization, and I put these little red guys in here so you know what you're doing, and you can see what kinds of returns are there. But generally, you're not going to be using light because light is not fully set up to be a buy side tool. We're basically on the sell side with all these tools. Thanks very much. Good night.